What's going on, guys? Hope you're having an absolutely fantastic day. So in this video, I'm going to be talking about my FOMC meeting game plan, right? So if you guys want to take some pointers from this video or copy my game plan, it's all up to you, right? But make your own financial decisions and do your own research, right? So Fed expected to hike rates by 3/4 of a point again, but its forecast may matter the most, right? So basically, this 3/4 points of rates is basically already priced into the market, right? People already expect 3/4 rate hike, right? So if they come up with, let's say, a 50 basis point hike, then yeah, the markets were really big. If they come up with a 1 point hike, then the market will get basically nuked, right? Or even like, let's say, above that if they want to try and shock the markets, right? So the expectations for a 3/4 point hike is basically 80% as of now, and the 1 point hike is basically ruled at 20%, right? So basically, people are not even pricing in 50 basis point hike, right? So in my previous video, you might have remembered I said that it's likely that they're only going to do a 0.5 point hike, right? But that was before I looked at the inflation print, right? So kind of foolish for me to try and make this kind of predictions, right? But it's just like some opinions and some thoughts, right? That's why I'm not really making too big of moves around these things because there's no way to know for sure, right? So this is moving really into restrictive monetary policy. We will be moving into no man's land, said one economist. We actually haven't tightened policy to fight inflation since the early 80s. So this is true, but the first part of his statement is actually not true, right? So it is not really restrictive policy to have interest rates at, let's say, 4%. We have it at what, 2.5% now. So after this, it'll be what, 3.25% to 3.5%. And your inflation is 8%, right? So it's real interest rates are still negative 5%, right? So I don't know what this economist is talking about, but it seems that he doesn't know what real interest rates are, right? But the second question is how fast will inflation drop, right? And if, let's say, inflation the next month you see it at 5%, and then the next month you see it at 4%, then yeah, we're at neutral and starting to get into restrictive, right? But I don't see that happening, right? Personally, like if it takes like few months for inflation to come down, I would say even a year for inflation to come down to their projected targets, right? Because the Fed at the moment has their projected target of inflation at 5.7% at the end of the year, and I really don't see that happening, right? Unless there's like some drastic fall in inflation, right? So bear in mind, shelter is about, I think, 25% to 30% of the index, and shelter is still going up, right? Because shelter has a 6 months lag because they use some owner's equivalent rents kind of way to calculate. I don't know exactly how they calculate it, but I know that there's a huge lag, right? Basically a 6 to 8 month kind of lag, right? So basically now it's playing catch up with gasoline. So gasoline was spiking in May, April, that kind of period, and now basically in August, September, then the shelter CPI is starting to creep up, right? So if we take a look at my game plan, so what is my personal game plan? So my personal game plan is if they hike 1 basis point, fantastic, it's a chance to buy the dip. So if they hike 0.75 basis point and nothing happens, I'll still be buying right today, no matter what. And the third option is if they hike only by 50 basis points and the whole market rallies, I'll not do anything, right? I'll just sit still, right? So it all depends on your time horizon, right? So some people will say that, oh, they are too focused on the small and medium term, right? Because the time horizon is incredibly important, because if you're investing for the next 20 years, why would you want them to only hike 50 basis points? This is like bad for the economy as well as bad for, in your sense, your stock prices, because the lower the stock prices can come, right? Let's say you're holding a portfolio, let's say you're 20 and you're holding a portfolio of 10,000. So if they hike 50 basis point, your 10,000 go from 10,000 to 10,500. Woo, congratulations. But if they hike 1 basis point, maybe your 10,000 goes to 9,000, right? So then some people will say, how is that good? I'm losing $1,000. But if you are still buying the same things and you have the conviction and your dollar cost averaging, right? So this will lead to better long-term results, right? But it's just that as humans, we want all this short-term gratification, right? So again, think about your time horizon, right? So short-term, if you're a short-term trader, then yes, you have to pay really, really big attention to this kind of announcements, right? But if you are a long-term holder, I don't think you should even look at all these things, right? Like you should take a look at it, but you really shouldn't be projecting or studying all these things. So I'm just looking at it because I'm thinking that, you know, if this happens, I will do this. But some people will be hoping for a certain result, and I think like that's the wrong way to approach investing, right? So if you are looking at it because you want to buy the dip, then yeah, of course, look at it. You have to look at the prices, right? If you are planning to buy the dip. So if you're not planning to buy the dip and you're gonna do nothing, and basically you're gonna sit there and let it panic you and let it make you stress, then what's the point of even looking, right? If you know you're going to hold on to the stocks for the long term already. So if you're enjoying the video so far, do help me smash up the like button, hit subscribe, and also hit the bell button and press on all, right? So this will really help out the channel, and also watch till the end, right? Because obviously you don't want to miss any important information. So the last thing I really want to leave you guys with is this big brain meme, and basically this represents thinking, right? And I think it's incredibly important in these times to think, right? Like no matter what time it is, it's important to think, but think how these hikes will affect your businesses, right? Let's say if you own a stock like Mercedes Benz, right? So look at the 5 year of Mercedes Benz. You can see that it's down, let's say 44%. So Mercedes Benz is actually the most indebted company on the planet, I believe, if I'm not wrong. So you can see that they have this all sorts of debt, and Europe is hiking interest rates. So what will that mean for Mercedes Benz's earnings, right? So I think you can make the connection that it's not going to do too well, right? So another stock that I personally own is actually Warner Brothers Discovery, right? So Warner Brothers Discovery has a debt load of around 50 billion. So they plan to pay down this debt load, and if they can raise prices, right? This is very important, right? If they can raise prices within the next 5-6 months, then I think they will do okay, right? And the basically increase in interest rates will be fine for them, right? But if they cannot increase prices and they cannot remain competitive, I will be selling out of this stock, right? Let me just say that first. Because of the debt issue, the raising interest rates will really affect them, right? When they need to refinance the debt. And you can see that it's down 50% in the past year, right? So basically, the spin-off, after the spin-off, it just absolutely got destroyed, right? So I'm still sitting at about an average of, I think, 1288. So I'm still above water, right? So even though you can see like this whole chart just looks red, right? So this is the power of just buying the lows, right? So you take a look at the maybe 1 month or something. There are chances for you to buy like 1250, 1271, which I personally got to buy at some of these places, right? So I'll have to take a look and maybe take some time to reassess whether this is going to really affect Warner Brothers materially, right? Like the interest rate hikes. And I think it will if they don't manage to raise prices. That's the most important thing. And if they cannot raise prices, that will also show me that this company doesn't have as big of a moat as I thought it had, right? And the last thing to really think about is that higher interest rates are actually good for some companies, right? So Circle is a SPAC at the time which reached a deal with Concord Acquisition Corp for a new merger. If the transaction goes through, Circle will become a public company at $9 billion valuation, right? So what does Circle do? If we take a look at CoinGecko, it's basically a cryptocurrency stablecoin provider, right? So you can see USDC is at number 3 with a $50 billion market cap, right? So what do they do with this 50 billion? They can put it in government bonds. They can invest in basically very, very safe securities. And if the interest rates for, let's say, a 10-year is at 4% now, right? So can you imagine your cost of capital is 0? Let's say 0.04 times 50. So you make about $2 billion every year. Obviously, that's before cost, and you cannot put the whole 50 billion into government securities because you need redemption money and all, right? But just to give you some idea of how to value all these things, right? So it's a good thing for this Circle, right? So basically, it's a good thing that interest rates are going up for certain companies, right? So you have to see like how it affects your company personally, right? Because even though higher interest rates, yes, it may cause people to discount your company at a higher rate, right? But you can see that originally when it was announced, right, actually the merger was only supposed to be 4.5 billion, and the company terminated it basically and signed a new deal basically in 1 year, right? And in 1 year, their valuation doubled, right? So you can see how different interest rate environments affect different companies, right? So let's say if the interest rates were still at 0% now, do you think it will even be valued at 4.5%, 4.5 billion, right? So I think when interest rates were 0%, Circle was not even valued at 4.5 billion, or it was overvalued at 4.5 billion, right? But of course, people were already projecting that interest rates have to go up, maybe starting a little later than that, right? Maybe in like November or something like that. So in hindsight, yes, it's easy to see, but you have to remember that in foresight, in July 2021, in May 2021, the Fed was still dragging their feet, still not wanting to raise rates, right? And now we have 75 basis points, 75 basis points, and maybe even another 75 basis points or 1 point, right? So you can see, obviously, again, right, I just want to stress this point very heavily, right? Look at your company and look at how the changing environments, changing macro environments affect your company, right? So don't look at like, oh, higher interest rates bad for all stocks. So that is the wrong way to approach investing. And that's about all I wanted to share today. If you did enjoy the video, do help me smash up the like button, hit subscribe, and also hit the bell button. With that being said, have a fantastic day ahead and peace out.